The fact that the opportunity in India was never lost on anyone. Everybody knew that there were phenomenal opportunities in India. You don't have to worry about the demand side of India. It's a supply constrained market, and as long as you can create companies that can cater to the local demand, it is an investable market where you can deploy large amounts of capital. But the question was always around, can you make money in India? Are there exits going to be in India? Are we going to see companies really exit in India? And if you take a look at the last 2 years and what's happened in the Indian market, and you're seeing the same in the Southeast Asian markets with some of the companies going public, the early stage investors, the growth stage investors have all ended up making a lot of money in the last 2 years. And in our business, liquidity is the grease that keeps the deployment going, right? So you deploy capital, you need to create shareholder value, you need to then exit those investments. And what happens as a result is then that ecosystem really creates a flywheel effect where more and more capital goes behind the startup ecosystem and the tech ecosystem because people have ended up making huge amounts of gains or capital return from those investments. And that era has started in our regions. If you look at the deal activity in India, the reason why you have almost 30 unicorns printed in India just this year is because a lot of the early stage investors have made money from their investments and they are redeploying that capital back into the ecosystem. And that creates a nonlinear growth in the kind of companies that can be created as well as be scaled in India. And we are seeing that in spades right now. One of our own portfolio companies, BillDesk, as you know, was the second largest M&A in the history of India. It's going through its regulatory approvals right now, but it got bought for 100% cash at $4.7 billion. You're seeing that in IPOs of companies like Zomato, like Naik, where early investors have made a lot of gains and they are redeploying that capital into the ecosystem. So I do agree with you. The ecosystem itself is growing at a fast pace because of liquidity being generated within the ecosystem.
And so let's go forward on that point. How much does the possibility of an exit or a good exit in India raise India's profile as an investment destination in Asia? I mean, especially when you compare, when you talk about the trade between India and China, the comparison between India, China, India versus China, so to speak. Where does that position India?
Tanvir, that is the single most important thing that helps the ecosystem. You can have great companies where you can invest money, you can help them scale, but in the absence of liquidity, in the absence of exits, in the absence of early investors who have gone in making money, you cannot see that ecosystem scale non-linearly unless there are exits. And when there are exits, it increases the confidence of not only the existing investors, but the new money that's now looking at these particular geographies, saying, yes, we can go and we can deploy behind the great entrepreneurs, which is a proven story, huge market, which is ahead of us. But at the end of the day, can you really make money out of those investments? So the exit environment is one of the most defining criteria for any ecosystem to prosper. And the last 18 to 24 months, you have seen the number of IPOs that are happening, the companies in the IPO pipeline, the way companies have traded when they have come out, which gives you a great validation that the global capital markets are looking at our region as one of the most attractive regions to invest in growth.